Last week, we saw the Nasdaq 100 rise by almost 16% in a single day, while the EURUSD reached new multi-year highs and gold prices reached new all-time highs. What's in store in this week? That's what we're going to cover in Thinkmarkets weekly market update. Before we start though, I need to stress that trading financial markets is risky and we may lose all of our invested money as well. This is not investment advice. Okay, good. So what happened? The US backs off. The US steps down from the highest rates. Instead of having rates of roughly 20% on the EU and even higher on the Southeast Asian countries, everybody is now being charged a 10% fee, except China, which has rates at 145%. Why did the US back down? Because you have backers like Bill Ackman, which before supported Trump, now distanced himself a bit and suggesting that we should have a 90-day pause to allow the US to negotiate with its trading partners without causing disruption. That actually was implemented. We also had JP Morgan boss Jamie Dimon saying that the US had a 50-50 chance of heading into a recession. This as well influenced Trump. Moreover, US yields, that would be interest rates, were soaring despite the odds of recession were increasing. That meant that we saw signs of people fleeing US Treasuries and dumping dollars, in other words, giving up on the US economy. And we saw something very similar when Liz Truss was removed from power. Liz Truss, for you that don't know, was UK Prime Minister that didn't last too many weeks before she was ousted because she caused cost of mortgages to soar across the country, as well pension funds lost millions of pounds. So what's happening now is that we're having these negotiations. The new rates are now at 10 across the board, with the exception of China, where the rates are 145%. Now, is this enough? No, we should still be bearish according to me. The reason for that is that if you remember, we showed you a couple of charts heading into Liberation Day where we said that India, one of the countries with the highest tariffs, had effective tariffs of roughly 12% against the US. Other countries like the EU were at 2% and the UK was a slightly negative and China was at negative 7.5%. So the highest level, which was 12%, is now closer to the baseline for all these countries. So we will still have a significant economic slowdown in the US and in the world because of these 10% tariffs. So with this in mind, keeping it super simple, I think realistically we're going to have lower stock markets and lower commodity prices, whereas EURUSD will keep on pushing to the upside, and so will probably gold prices because these rates. Now, in the case of China, the rates are much higher than 10%. Trump would allow smartphone or computers to be imported without any tariffs. At least that was the news on Friday, Saturday. But on Sunday, he retracted on that and said that it wasn't true. They will still have to pay tariffs, in this case of 20%. Now, it's not just simple as this, because you also have the Chinese retaliating. The US increased the tariffs on them, they did it on them, back and forward. And the latest move is that China is halting the export of key metals. Talking about rare earth metals, things we use in drones, computers, cars, military equipment. They are now halting this, and they will likely try to stop the US to get hold of this, which is obviously not great. So I personally think bad data is still ahead of us, and I wouldn't be really a buyer just yet in risky assets like the Nasdaq 100. So last week we did have a push, which we needed anyway because we're quite oversold at that time. And we corrected up to the 50% level, and that's usually what people would sell, 50% here on RSI on the daily, and the market got rejected, so this could have been traded sell here, book profits here, and now the 200 moving average is pushing lower, and I think it's going to keep on pushing lower. So as long as you trade below that level, I think it makes a lot of sense to be bearish. As well, you have support here that's turned into resistance. So really between 19,000 all the way up to 19,910, I think people are more keen on selling rather than buying, targeting 17,835 followed by 16,500. If we look here at Brent crude oil, a couple of weeks ago we said a break to 68.26 could take you down to, I think it was 56 at the time, because of a double bottom pattern. Well, we dipped very nicely, not all the way down, but very nicely lower. Then we had that very strong push, and here people sold, which made a lot of sense, and now we're pushing to the upside again. I think the reason why we're pushing up is that people think that Trump is gonna fold completely, like he's gonna give up on these tariffs, which I think is unrealistic. I think we'll have at least 10% like we have now. So it's gonna be a slow burner. It's gonna be a situation where the economy slows and slows and slows, unless of course they cut taxes. Because remember, he wants to have tariffs, because if he has tariffs, he can use that to fund tax cuts. If he just goes ahead and cut taxes without any funding, then that's a huge risk. Could be the same as we had with Liz Truss. So more people selling off bonds and more people as well selling dollars. Now remember, the biggest holders of US Treasuries are Japan and China. And in the case of a hot war, although I don't think it's likely right now, it would be fair to assume that China's going to try to dump more of its treasuries. Long story short, bearish below 67.34, targeting 62, targeting 60, and then maybe 58. Although I don't think it's going to happen just yet. The reason why I don't think that's going to happen just yet is because a drop down to 58 would probably require bad data. We'll have the PMI readings coming out next week. They will give us an indication of what is happening in the world economy. As for Bitcoin, BTC, the trend now remains bearish, but it's interesting to see how it's holding up so well. Sort of push to the downside and then push upwards, and it's now stabilizing. And if we trade above 88.8K, then we'll be above the 200 moving average. We would have stopped creating lower and lower highs, and at that point we could probably push up, down, and then up again. How about EURUSD? So EURUSD is bullish. If you look here, you got sort of double top plus another top here, making a triple top. Then you have this level here, which is together makes this an ascending triangle pattern. I measure from here to here, and it suggests that a break to 112, which we also discussed on TradingView, in fact we discussed a break much earlier, would propel the price to the upside. And it sure has. Pattern says we can go to 122, which makes a lot of sense. And one reason for this is that Germany is investing more in its economy, and the US is reducing the size of its economy via government job cuts and then as well tariffs. And I think as well now with lower energy prices, the EU is also probably going to do good. So maybe down to 112.59, but as long as you trade above 110.67, people are probably going to buy, targeting 17 and maybe 119 over the next couple of weeks. We also need to look at gold, and gold prices are bullish. Last week we said to be bullish here. Unfortunately, we spiked below that trend defining level. So if one would have worked and traded exactly with these levels, one would have been stopped out. The overall direction though, we were correct on that, and I still think we're gonna continue to push to the upside. If we go down to maybe 3,148, but do not trade below 3,033, I think people are gonna look to buy in this zone, probably just in this first bit, targeting 3,300 and 3,400. And with that, we conclude the current situation and also the charts. For this week, we want to keep an eye on the US Empire State Manufacturing. So that's the manufacturing sector in the New York area. And it might give us a bit of an early read on the tariff impact. It's going to be messy, the data, but it might give us a little bit of an input. So what we want to see here is we actually want to see these numbers improving, because the idea for Trump was raise tariffs, get production back here. On Wednesday, we look forward to UK Consumer Price Index. I think even if we drop a bit, yes, GBP might lose a little bit against the euro. We have seen quite a strong reversal there with the euro gaining quite a bit, so that might be something to play into if these numbers are weak. Bank of Canada, I don't know if you remember, but Canada increased sales tax about 2 months ago, and that caused inflation to soar. So realistically, they're gonna lay low this time and hold rates unchanged, but we want to see what they're gonna say next about tariffs, how is that weighing on the economy? If it weighs too much, if they are worried about that, that might hint about rate cuts going forward. Powell as well, he speaks. So he spoke 2 weeks ago, and at that point he wanted to lay low. He wanted to wait and see what was going to happen next, because he thinks the US is going to be hit by high inflation because of tariffs, and he also thinks that the economy is going to crumble because of economic growth. Now, obviously, he didn't use these words exactly, but he wants to lay low. We want to know now if he wants to change that or not. Realistically, he will keep on being neutral, and he will probably wait for economic data to soften a lot before he takes action. Of course, as long as inflation also moves to the downside. ECB will probably cut rates from 2.65 to 2.4. With oil prices tumbling, we'll probably see lower inflation in the Europe going forward. Also, with the euro gaining, inflation will be lower as well, because now it's easier to buy what we are importing, and that could possibly as well result into more rate cuts. And that's it for the week ahead. If you have any questions, leave them below in the comment section and we'll come back. Happy trading. Be careful out there. It will be an interesting one. Thank you.